Hi, and welcome to the Market Alert for Thursday, the 19th of November. Bitcoin jump, stocks dump after vaccine pop flops. But there's more to this story than the vaccine, and that is that stocks were slammed as New York City closes schools again on soaring COVID-19 cases. Cases are one thing, death are another. But this is what the powers that be, with their Build Back Better, destroy the current paradigm, are following at the moment. Will the rest of the country soon follow suit? Of course they will, because you can't build back better until you've destroyed everything that is around you. And of course this adds to the manipulation of the markets as well. Yesterday we saw the market being kept on the upside, even though the implied volatility is pointing towards a correction in this market, but they'll keep bringing it back as long as they can bring it back. And yesterday morning we saw prices move lower to begin with, trading down to the S1 level. You can see it's trading straight to here and then moving back to the upside sharply as prices traded up towards the 200 MA, traded through this. And then we had a potential buy signal that was removed as soon as prices reversed through the 200 MA. It was a no news Wednesday, which is unusual. Prices coming back. We then had this short and the order was filled. Now watch the volume. This is key to this. You can see at the moment there's barely anything there. And this is why this signal failed, because they brought back so much, as you can see, greater volume in this bar than the previous bar. And that means that they were buying at this level. So given the amount of volume in this one and the opportunity to always get back in at some point as prices started to move higher, I pulled this one and decided to stand aside, see what happened, and then prices became sideways. And interestingly enough here, again, notice how prices now are above the 200 MA, and they came back and tested the BRN, the 20 bar moving average, and the 5 bar moving average is broken above as well, so indicating that prices are likely to move higher. We've got the resistance to the left here, we've got the DP which needs to be taken out in order to move higher, and that's exactly what we saw there. You can see the volume, and again it's increased significantly because they know this is a major resistance area for the prices to trade above. They come back in the next bar, and not a lot of selling there, and then prices are free to trade to the upside again. Now what I did here was draw in, because we've got two lots of resistance here, so I've drawn in a horizontal line. Got some potential weakness there as well with the increase in volume. However, yesterday was a day when there was no news, and this allows them to even levitate the market, even if they can't move it to the upside, like in this bar where we see a quick spike up to the close. The volume increases, prices come off the high, but in the next few bars the selling disappears and allows them again to move the market to the upside. Notice how it's hanging on to the 5 bar moving average there until we get a potential sell signal there, and once again straight off the 20 bar moving average, prices are brought back to the highs which we see there, and then trading up to the close with an increase in volume. We've got two of these en route as the market goes through the first horizontal resistance line that I drew in, and then up to the second one here. So prices will move back to the upside, but very, very quiet at the moment, as obviously the market's waiting to see if Trump's going to leave, is the only conclusion that I've come to at the moment. And you can see how quiet it was, but again, to drive through any resistance area you need to see an increase in volume, which we see there, and then we've got some potential weakness. Then on to the afternoon, we have the same thing. You couldn't make it up. We've got prices sitting again at the 200 MA. Prices open, we see them moving up to the upside towards the high. The market managed to get through this in the mid-morning session, and then prices are met with buying, as you can see there, as they sit on the high. And then all of a sudden we come back down, we get the shakeout. We come back down to the 200 MA, and this is where it gets interesting on this one, because prices trade down you can see that they already want to hold at the 200 and the 20 bar there with that tiny bar. A lot of volume, it's about 75% of the previous bar as well. So you're getting the first indication that they're trying to hold prices. The market goes down, just touches the entry price, but then we get a green bar to indicate that we could be seeing prices reverse, and that's exactly what happened as again they went straight through the high and the stop and move prices higher. Now here we've got a bit of an interesting bar as well, because the volume is greater than the bar that drove up to the stop loss. So prices now need to remove the selling, make sure that it's disappeared, and then you see the low volume here, so the selling is gone and prices are free to move to the upside, which they do, trading back up to the fibs in the daily chart that I drew in before. Notice how this bar came in and stopped the up move, straight reversal with the same amount of volume as well there. So a good indication that prices are going to either trade sideways or lower, and you'll see there they move to the downside. But not a great deal. Again, stuck in a range at the market, just waiting for some sort of news, either financial, which they're not going to get because there's no printing at the moment. So waiting for political news. So yeah, not the best of days, but it was no news. Market being able to be manipulated to the upside for yesterday. So overnight, let's have a look. So early evening, or late evening I should say, when Cuomo made his announcement, New York was shutting its schools. The market then moved lower. And overnight as well, prices have traded down to the low. Again, look how significant this is and how prices have come off the low. Always a great area as a buy area there. And prices at the moment above the 200. But if we look at the bigger picture of where we are, we still have the DP to the upside there. In the daily chart, well, we can see the problem we've got at the moment. We're just getting tighter and tighter in the range. We need this volatility to break so that we can get some decent moves. I mean, the bars are really tiny in the intraday, which is not going to help us at all. So we do need to see the volatility kicking off a bit, which it's moved up a bit yesterday from 19 to 20. It was actually 19. I can't remember the actual point difference, but yeah, it was around 1965, I think, somewhere around there. It's 2009, so it kicked up a bit, and again that's because the Dow sold off after the announcement about the schools closing. So we really need to see this kick up a bit so that we get some breakouts in this daily chart from this very tight coiling sideways move that we're seeing there at the moment. So yeah, we could do with some news. It's like a consolidation as well, following the spike up of the vaccination news there. I noticed actually that there was some news again yesterday with regards to the vaccine, saying that it's now 95% effective, which moved the market only slightly. I think the vaccination news is becoming a bit old, or not well, old in the sense that they can't use it to make the sort of moves that they did last week when they had the first one released by Pfizer. So that's about it really for this one. I say we could do with the volatility picking up a bit, and even the Dow is stuck in a bit of a sideways move there, which you can see having broken out of this sideways move there as well, but still in the highs. But the lower the volatility goes, the bigger the correction. That's always been the case, will always be the case. So we need to see the implied numbers come back down. If it's going to continue to the upside, then we need to see the market come back down to these sorts of implied levels. We're not going to see these over here. It used to be when it got down to 10. Could it happen? Absolutely, but it's a bit unlikely given the massive increase in implied that we saw during February and March that this would occur. So the base really is sort of 19, 20, 18 in that sort of region now for the implied, to give an indication and a potential trigger for a correction in the market, which it is really due for. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.